Boom! What's going on, guys? Welcome into your energy news beat here on this gorgeous Tuesday, January 6th, 2021. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, energynewsbeat.com, Stuart Turley. How you doing today?
It's a beautiful day in this neighborhood, and it's an interesting day in the Americans.
It's a very interesting day in America. First off, guys, you can check out what we've got on the show and all that in a bag of chips by checking out our rundown on the side here. Subscribe to this YouTube channel, Energy Newsbeat. Follow us on Twitter, Energy Newsbeat. I'd be remiss if we didn't start out. We're in the midst of the U.S. Capitol currently being locked down after the certification of Joe Biden and specifically Mike Pence and Mitch McConnell coming out in support of certifying the election, which kind of caused things to go. So all we'll say on this is we hope everybody's safe. We hope this calms down and really calms down, and our thoughts and prayers are with everybody out there. What's funny is markets have been shaken off this news left, right. Early this morning when we woke up, it looked like both Democratic seats in the Senate were going to be won in Georgia. Raphael Warnock looks like he's going to is actually beaten Kelly Loeffler. Democrat John Ossoff, who's running against David Perdue, looks like Ossoff is going to win. So that moves markets interesting. So on the SP side, SPY is up half a percentage point. Why? Well, Goldman Sachs is expecting another $600 billion stimulus program. We'll probably see $2,000 checks. So on the SPY and the Dow Jones side, Dow Jones was up 1.3 percentage point. More cash into the markets clearly means we're going to see some inflation, which is good for the stock market. Tech stocks do not like this. They are down 1.25 percentage point, really off the back that Democrats are probably going to investigate them. There's a lot of changing regulations that are coming around, being led by the Democratic Party on the tech side. So it'll be very interesting to see in tech stocks, specifically those shares of Facebook, Uber, and Lyft, all down big off of some of the coming expected regulations. Now, that's all just the quote is from Tom Essaye, founder of the Sevens Report. In the immediate term, markets are pricing in more stimulus. From an equity standpoint, that means tech underperformance or cyclical value outperformance, which means you'd probably be buying tech right now. If you ever hear cyclical value outperformance, buy. He also said the biggest takeaway from Democrats' win is more power behind cyclical / value / higher trade rates. Also, guys, on the data front today, private payrolls fell 123,000 in December, which marks the first contradiction since the early days of the pandemic from the ADP report. Economist survey by the Dow Jones. I consider myself one of those. We thought there was being expected growth of 60,000. So not good on the jobs front, and that really comes back with some of the rising COVID numbers. I mean, I just had to go grab coffee, you can go sit inside, but then you can't. I go to have coffee today with somebody. We can't even have our coffee inside. Nobody was in there. So yeah, it's from the economy standpoint, there's so much stuff going on. Markets do seem to be shaking this off though. On the crude oil side, it's up 1.4 percentage points off a couple things. One, extremely bullish crude oil inventories, 8 billion, that'd be a lot. 8 million barrel draw will cover a couple of those numbers. It was all the way up to about $51 oil. I'm just all over the place today, Michael. This election stuff just got me thrown off. When it was all the way up to $51, with the breach of the U.S. Senate, you can clearly see oil dropped about a full dollar. It was all the way down to about $49.50. Since rebounded, currently trading about $50.36 back into the curve. Actually drops about 0.8 of a percentage point, which is interesting considering the certification of the Biden administration. Probably bullish for crude oil prices from a fundamental standpoint, unless you have minerals under federal land. Then you're in big trouble probably. That's down 0.8 percentage points. So that's really interesting on that front. Move over to natural gas, $2.71. That's up 0.3 of a percentage point. Back into the curve, stayed fairly flat. It's a weather trade at this point if you're a natural gas trader. It looks like it's going to be obviously a warmer December. It looks like there is some cold front moving in. I mean, it was pretty cold here in coffee day. I was having to stand outside. But nonetheless, it's staying fairly even. XOP on the E&P security side, 65.05. That's 3.5 percentage points on the upside. OIH, which is oilfield services, 175.82. That's 4 percentage points on the upside. A couple of our downside movers, Camber Energy, Tensico Gas, Houston America Corporation, Ervesco Corp, and Mexico, all down big. On our upside, we've got some nice equities on the upside. Contura Energy, Murphy Oil Company, they're both up 7 percentage points. Ramaco Resources, they're up 8 percentage points. Suncoke Energy up 13 percentage points. Our friends over at Ring Energy, they're up 16 percentage points, currently trading at 84 cents. Stu, on the international news desk, what do you got for us today? No OPEC, so we had to move on.
Oh, we still got a little bit of OPEC.
We do, yay.
Yeah, gotta love that. Hey, our first story out of the block is from our friends over in Norway.
Yep.
Absolutely. I found this very interesting. Volkswagen has replaced Tesla in Norway. Now, here's a little bit some tidbits in this article we just ran on the news beat. And that is, are you ready for this number, Michael? How many electric vehicle percentage did Norway have in new car sales last year?
It's probably, I'm going to say 15%, but it's probably some scary high number.
54% EV cars. World leader. I'm talking, that is the market.
And Volkswagen took the lead from Tesla.
Yes, absolutely crazy.
I
think it's fantastic from the standpoint that there's no tax incentives there. I don't know how they're doing it. I think it's fantastic.
Well, I would be remiss if we didn't bring up our meme of the day, which you can check out on the world's greatest website, Energy Newsbeat. One of the best memes of all time that you have up there is renewable tax credits. Couldn't have done it without my government assistance.
That is absolutely funny. But, here we have on the charts, it's kind of funny that Norway is seeking to be the end of petrol and diesel cars by 2025. That's very aggressive. You'll have a six-pack by then.
Yeah, okay. Maybe not. Probably not at the rate I'm going at. I definitely don't have a six-pack. Shifting over to the U.S. shale side, there's just a couple things we got to cover. Oh, you're missing. I cut in on you. Sorry, Stu.
Hey, I got one more OPEC here. Okay. India. We love the leaders of India. They always try to get the best price energy to their people. And they had Iran and Venezuela. Iran was their number 2 oil importer. They have to import a lot of oil. And New Delhi, the Biden administration is going to have a different impact. Yesterday, we all talked about OPEC. Well, here's some problems for OPEC coming around the corner because Venezuela and Iran are going to be selling outside of OPEC. And they're going to be selling to India. They want low-cost oil, and they're going to be getting it outside of OPEC. You heard it here second.
Oh, so, they'll be coming out of OPEC, yeah. For Energy Newsbeat exclusive.
All right.
Now we can move on. Cool. Great stuff in the international news desk, Stu. You can follow everything on the world's greatest website, EnergyNewsBeat.com. It's EnergyNewsBeat.com for those of you who needed to hear it a second time. On the U.S. shale side, 2 stories today. One, EIA crude stocks fall 8 million barrels, which really buoyed oil prices. They were up to about $51. Some of the other high-level numbers, domestic production stays flat at 11 million barrels. This is another number I like, though. Refinery utilization, last week 79.4. Finally cracks 80, 80.7. Good number. Usually, historically, I'm going to give you an idea. Last year, we were at about 96 or 93% utilization. To give you an idea of where we should be relative to last year, we still got about 13% of those refineries to turn back on. Different. We only got a 1.2 million barrel draw on the API last week. That's why you saw this buoy oil prices, because there was about a 7 million barrel spread. The other interesting thing I thought that dropped was EQT. Largest Appalachian player comes out, and they announced it in a press release. They've hedged over 80% of its annual production in order to protect against downside commodity risk. How much lower can gas prices go? So let's just run you through the numbers here. No. EQT now holds NYMEX swap volumes we're about to get volume, 997 million decatherms at an average price of $2.96 a decatherm, or oil trading or natural gas trading at $2.71. There's an approximate swap right there. The company's net short NYMEX call options. Okay, so they're net short on call options. If you guys want to, we can dive into what that means later. But that's 447 million decatherms, $2.93. So that's their ceiling. Their net long position of put options are 227 decatherms, $5.59. So you're looking at about an average position price, about $2.76. They've also got a fixed sale swap position for 72 million decatherms at $2.50. Yeah. I think if natural gas drops like I think it will, they're in good. They're probably about 270 as their strike price, which, you're looking at 271. It's a decent price. It'll be very interesting to see who actually set up all of these fixed prices for them. I think the issue is if you see a run on natural gas, you're going to see people like EQT, unfortunately, miss out on it. So that's I love hedging. I enjoy that stuff. The problem is when prices are low, it's really not the time to hedge. It's time to hedge when prices are high. Are natural gas prices so high that I'd consider hedging? Yeah. But then again, that's why they pay Toby Rice over there the big bucks, because he gets to make these decisions. You got something, Stu?
Nope. I'm just laughing at you paying the big bucks.
Oh, I mean, it's just why they pay those guys the big bucks. They get to make these decisions. I get to sit here in my AC-controlled room and just bloviate. Stu, anything else today? It's, on the oil, unfortunately on the energy side, it's been quiet. Politically, it's been absolutely nuts. So we hope everything's, but are we missing anything on today's show?
No, we just have our prayers for everyone as a U.S. citizen.
Yeah,
that's all that matters.
We will definitely be doing that, guys. And on that somber note, we'll let you get out of here. On another somber note, we'll let you get back to your job, finish up your day. Thank you for checking us out on the world's greatest energy news show, energynewsbeat.com. We will see you guys tomorrow for another beat.